Good afternoon, everyone. Today is Monday, the 31st of October, 2011. Happy Halloween. This is Brian Shannon. Let's take a look at these markets here. We did see a pullback today, obviously, and we had the S&P 500 down $3.10 or 2.4%. So it came in with a gap lower and basically churned sideways for most of the session, but the last half hour or so was a pretty strong sell-off, really, when you look at it here on this 1 minute chart. It looked for a while as though maybe we were going to recover as the market got back above this. Well, let me just redo that and change the scaling so we can get that bad print out of there. What we had basically was this inverted head and shoulders pattern with the volume weighted average price acting as a neckline. That didn't hold, and after the market made a lower low, that's where we got the heavier selling. So the market seems as though it still needs to settle down a little bit here, and we've had a massive October, still just a real strong percentage gain for the month, and we've got this trend line just below at about 124 that basically comes in and fills this gap down to about 124 and a half. So 124 to 124 and a half looks like an obvious level where the market should at least test some support, and we'll see if it holds. I don't know why these are still on here, but basically those are some important levels. Basically the same thing as this 124 and a half area, and would come down and fill that gap as well. So it looks as though the market's heading down towards that. In order for it to turn intermediate term bullish again, I think we'd have to see it at least above today's highs, if not overtake that 3-day volume weighted average price. And the 3-day volume weighted average price is basically since that gap higher that we saw last week. What's the average price since that day been? And it's been about 126.60. So the S&P 500 looking like it needs to settle down a little bit further, perhaps come down to the point where the market broke out at 122.80ish. 120, or it was about 123.50 if I recall correctly. It was 123.52. So perhaps we're headed down towards 123 and a half to 124. That seems reasonable. So far we are holding above that rising 10-day moving average. That's the red moving average, and we're looking at real tick charts here. This is realtick.com, the platform that I use, and the charts that we look at each week here. The S&P 500 though may be down towards 123 and a half. Let's just give it a little bit of time to settle down. We did have lighter volume in here today, but we're down 2.5% on light volume. It's still down 2.5%. Only price pays, and that's what matters most. The Nasdaq really is kind of a mess when you look at this. Not necessarily a mess, but just been really choppy in this recent little channel in here above that 20-day moving average. Perhaps we get down to the low end of this channel, down at 56.5, before this market kind of settles down a little bit. The weekly time frame, of course, we're up near decade highs, so it's tough to call this bearish. But you look at the 10-minute time frame, and we are with this little pattern of lower highs and lower lows right now. If we take a look at the 3-day volume weighted average price in here at about 58.60, that's close to today's highs as well. And again, that's just what we're measuring that because of since that gap higher last Thursday, that's the average price that this Nasdaq has traded at. So it looks like we're headed at least for a gap closure down towards about $57.40, maybe down towards that 20-day moving average in the lower end of this little channel it's been in recently. Russell 2000 was down 2% today, down to 74.01, and getting pretty close to this prior resistance area. So this prior resistance, 73.50 to 74, basically has been a pretty important level for this for the Russell 2000. And just below that, of course, we've got the bigger level at about 71 and a half to 72. So if we take a look at that 30-minute time frame, we can see that a little bit more clearly in here. The next bigger level down is about 71 and a quarter, really. So if we break down through the 74 level, it looks as though maybe a test of about 71.40 or so, 71.50 rather, would make sense. That's of course, we still have to come down and close this gap at about 72.80, and the same thing here. The volume weighted average price is still well up above. So anyone who bought in the last 3 days after the market gapped higher, and that's important because that gap higher occurred after the market already had this big run, it began to digest. It gapped higher. Now, so far, the people who bought late in those last 3 days are losing money. You can't point to the volume and say so far it's light volume, but don't forget about how everyone was complaining at the beginning of this rally here over the last month and a half about how light the volume was. Only price pays. So let's let this Russell continue to settle down a little bit. It's going to need to get back above 75.60 for the buyers to really kind of take back intermediate term control. The semiconductors are dropping down towards the breakout point near at about 31 and a half. Really, if you take a look at the 30-minute time frame, you can make a case that it's actually about 31 bucks a share. That's really the more important level. That's where we had some resistance that basically became support. This market, we stair-stepped higher now. Maybe we're stair-stepping lower. Gonna need to see it back at least above 32.20, and that 3-day volume weighted average price would say that actually 32.30 is what we'd want to see it above back before we could give the buyers the benefit of the doubt again. Short-term trend line was broken. We have lower highs and lower lows. Maybe we're going to get another price correction, but this has had such a big move in terms of percentage that we want to look at it and say what's most likely here. Again, who are the people that buy on a gap higher after the market has already made this massive percentage movement? It's usually not the smart money. So this could be setting up a deeper pullback, and the semis down to maybe about $30.50. The financials still just holding on to this 1350 level where we had the prior resistance. So we basically closed right on that level that had been, of course, this prior resistance in here, $13.50. If we break this 1350 level, then the next potential area for us to head down towards would be, again, gap closure in here at about $13.25. And below that, we had the $13 level, which is a big level for the financials. And we can see that in here that this was a big prior level of resistance. It has the potential support, just the way that this prior resistance at the 1350 has the potential to be support. But if the 1350 level fails, down towards 13 seems reasonable and likely. The volume weighted average price of 1390 is what we've seen since that gap higher. So you want to be aware that this market has had this big rally. Where does the market come from? Again, big rally. Where does it have the potential before it's likely to meet some resistance? We came into those levels in these markets, and now we're getting a little bit of a pullback. Let's give it a couple of days for the market to reveal what it really wants to do here, whether it's going to gently pull back or if the sellers are going to start to develop some conviction in here over the next couple of sessions. But I would suggest just kind of going slow here for a little bit.